Hi, Jonathan York from Bay Financial Partners. Look at the investment markets. Could be another pretty big week in the US. We've got the Jackson Hole Central Bankers Economic Forum at the end of the week. And Fed Chair Jay Powell is expected to give a pretty sort of important speech. It'll be interesting just to see what the content of that speech is. Now, there's been some talk that he maybe should set the markets up for a sort of a 50 basis point cut in September. Now, if that is the case, that'll be pretty well received by the markets. It'll just be very interesting to see what sort of comes out at the end of this week. But maybe as important will be the sort of off the record sort of comments and sort of talks between various central bankers in regard to the sort of state of the global economy, obviously the US-China trade talks, Brexit, etc. But certainly quite interesting. I mean, the US stock market has recovered from the sort of panic sell-off, the sort of beginning of last week, gradually sort of clawing its way back. President Trump has sort of extended the Hawaii sort of 90-day sort of limitations in regard to trading with US companies. That's been extended for another 90 days. The trade talks are still ongoing. China is still expected to visit the US for the next sort of face-to-face round of talks. So, potentially we are sort of moving in the right direction. But as always, the markets are maybe just one tweet away from President Trump for sort of turning it into a bit of a sort of schmozzle and, really sort of upsetting the apple cart out there. And with the recovery in the global share markets, oil has sort of picked up a little bit and sort of come back above that sort of 55, but still sort of pretty range bound. So, the big sort of question out there really is going to be one, how they can sort out the sort of Middle East sort of turmoil, most notably obviously Iran. And secondly, if China does start to buy the oil out of Iran, you've then got that sort of circumnavigation of the sort of sanctions imposed by the US and the rest of the sort of Western economies. It'll just be interesting to see what happens to oil prices on the back of that. Potentially, there's been some work done by some of the analysts out there, so it sort of could take a knee-jerk reaction down, potentially around sort of $30 a barrel. That was the case, obviously that would then just put further deflationary pressures on the global economy. At a time when you've got central banks trying to get inflation back into the economy. But certainly with record low interest rates, it's quite interesting why many governments haven't introduced a sort of massive infrastructure spend. That can be the case here in New Zealand as well. Record low interest rates, get some sort of 30, 50-year bonds out there at these sort of rates to fund this sort of infrastructure. Brexit's still rumbling through. PM Johnson is still talking about, just remove the Irish backstop and we can get a deal done. I don't think he sort of quite gets it, that he's not really in a position to be able to sort of making demands. The UK was the country that voted to leave, but now they're trying to sort of sit around the table and say, well, this is what we want and you must accept it. course, his case hasn't been helped by a leaked document in the UK, apparently, for a no-deal Brexit come 31st of October, and that really painted a pretty dire sort of picture for the UK economy. And all the time you've got him and his sort of government sort of bungling along at the moment, you know, sort of trying to make some progress, but really not getting very far. But also Europe's facing its own sort of issues. The ECB potentially looking at reintroducing quantitative easing and maybe extending those negative rates as well. Just on negative rates, you're now getting to a case where you've got around $15 trillion worth of debt that is now at negative interest rates. Now, obviously, there's been a big case made about the inversion of the yield curve in the US, you know, 2s, 10s. But it is sort of quite interesting, and obviously, you know, you are operating in a potentially, you know, a different environment. You've never seen this much sort of quantitative easing, a sort of crisis like we had back in 2007, 2008. Certainly, normally an inverted yield curve would sort of signal a recession. You know, there's many economists and analysts out there now saying, well, actually, yes, it should do, but look, this, and this. You haven't had this happen before. Potentially, it is different this time. Now, obviously, from the US perspective, you know, sort of going into recession in 2020, an election year, it will be very interesting to see how the election would then sort of pan out. Here in New Zealand, you know, certainly consumer confidence is taking a little bit of a hit. Although obviously with the recent interest rate cut, that half-point cut, that potentially should have underpinned the housing market, which should sort of boost a little bit of a consumer confidence out there. Port in Napier started trading yesterday. Certainly, if you were lucky enough to get any of those shares on the IPO, you'd be pretty happy. Ended up with around a sort of a 40-cent capital pickup on day one. Now, with these low interest rates, Infratel have a bond in the marketplace, 7 years and 10 years. Seven-year will be 335. The 10-year will be a margin over the 1-year swap rate, but indicative level at the moment will be around 364. Now, if you are interested in those, call us on 0800 867 323. And sort of as discussed, there are plenty of income options available out there, and if you're interested in discussing what is available, so call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.